Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here's your weekly technical analysis of Chicago wheat and corn. Chicago wheat. The main recent activity had been the fall below the significant neckline extension, currently at 655, of the small October 2020 to November 2020 head and shoulders top, which you can see highlighted on my daily chart in dark blue. This neckline has a fairly wide congestion area clustered around it from late April to mid-July and from about 609 up to 679, including the declining long moving average, currently 657, and below it now the declining medium moving average, currently 629. It is this congestion area that had been pressuring the top of rallies throughout September, October, and now into November. 4 weeks ago, I also said, and I quote, "We've also seen a pattern form over the last few weeks. The pattern I have in mind is an unusual one. It's one that immediately springs to my mind, but looks in the wrong place. And that's see the whole of the late May to end of July action as a double top, with a neckline at the same neckline extension of the small but influential October to November 2020 head and shoulders top." End of quote. After much pondering, I realized this pattern was called, and I kid you not, a cat's ears pattern. In essence, it's a double top pattern in an overall previously moving downward market. It's not that rare, but enough that it took me a while to remember its name. The potential below for a cat's ears pattern at target X2 is in the 502 zone. However, before we can even look there, we have some interesting supports, notably on a closing basis. The May 2023 low at 587.75, which is just below the March 2021 low at 592. And even now, this week, we've seen for the first time in the past 2.5 months of testing, 2 real consecutive closes below it. Additionally, this is only on a pure low basis. We have the September low at 570, which was tested in early September and again at the turn of the month from September into October, and has so far held. Interestingly, the potential target X2 is also just above some quite historical congestion supports between 495 to 500. Now recently I had laid out an idea for a mid-September based possible horn bottom, possibly even a triple bottom with October's action, maybe even this month's action as well, though this is only feasible on the continuous daily charts. I gave it a primary target X up in the 640 area and a secondary hard to reach target X1 in the 650 area. Gave these targets a short window of time in which to be achieved, and unfortunately the market did not have an appetite for them or the pattern, so I will retire them both after this commentary. Chicago corn. The medium moving average, currently at 510, highlighted in purple on my daily chart, has been an effective cap on this market since about March, especially recently in October, November and earlier in June. When it was penetrated, it still held down the market. The recent capping action in October resulted in a push down below the mid-September to late October lower bull channel line, highlighted in dark green on my daily chart. This move effectively put an end to a late July potentially rounded bottom pattern, and also changed the aspect and broke the follow-on higher to a larger pattern here, a May to September descending wedge pattern. I'd previously laid out some potentials on the top side for this pattern, and last week I considered retiring them as the move below the bull channel offset some possibilities on the top side. Well, this week I've gone ahead and retired them. So in addition to the declining medium moving average, we have also the same old congestion band between 490 to 498 that includes the 2021 low at 498, as well as the flatlining short medium moving average, currently 495, pressing down on the market such that this week we were set up to possibly make a weekly key reversal. In the end, the action relented and we ended up with the lesser outside week and a pretty neutral version as well. The question now is whether the support below will hold. You see, we seemingly have little in the way until the lows formed over the summer around 473. So the question now is, will 473 hold? You see, if it doesn't, then we have some congestion starting at 463, but it isn't that strong. And I'm concerned that the accumulated ammunition overhead from the descending wedge pattern and the bull channel may punch down through it fairly easily. For a second week now, It all depends on the 473 zone below. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.